You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to watching the Financial Survival Network. I'm Kerry Lutz. Well, looking for higher returns, aren't we all? Very difficult to find such animals in the current market. Although rates are going up and perhaps dividend yields as well due to lower equity prices. Well, we got Joe Robert on with us again. And Joe, you're working on a fund right now. But before we get to that, just tell us what your perception of the market is now, the different investment classes, be it real estate, be it crypto, digital assets, or the market. Where are you seeing things right now?
Well, thanks for having me on again. Of course, I appreciate it. Where I'm kind of seeing the market is basically we're having we'll call it a slowdown or a pullback or, just a period of time in which probably for the next 12 to 24 months, things are going to be a little bit slower. Prices, let's talk in the real estate sector. I think depending on the jurisdiction, they are either going to come down, a few percent, maybe even 20%, depending on where you're at. I think most of the housing, under the 400 or 500K, depending on the income demographic, is still going to sell very well. There's a lot of first-time home buyers still looking to get into that area. So that's on the housing front. I do think there's definitely corrections happening there. And even on the higher end, there'll be a bigger drawdown.
Mm-hmm. All right. So we got a correction. Some might argue we're in a bear market. And so you have to change your goals. You got to change your strategy, most importantly, and you have to adapt. So the first rule of investing, of course, is don't lose money. And then the rule number 2 is, if still in doubt, see rule number 1, right?
When in doubt, never lose money and don't over leverage, and definitely have a lot of cash reserves in this market. I think that's real important. I think, from one point is, one, you want to have cash reserves to jump on opportunity as it presents itself. And then 2, if we do see a little bit more of a liquidity crunch or something in the markets or maybe you have vacancies in your property or whatever it may be, that you can cover your debt service.
So what about leverage in this type of market? That can be a risky proposition, can't it?
Yes, I think all loans should definitely be at lower levels. Real estate, a lot of times in the past, you were probably maybe up around 70, 80%. Now, you're more conservative. You want to be in and around that 50 to 60% mark.
Right. So lever down, and but then your returns are going to go down as well.
That is true. Can't have high returns every year. The last couple of years we were above normal, and so we may see below a little bit as we get back to normal levels, or maybe we come below normal next year or two. I think things will be a little bit slower.
Right. Well, if we're in a recession now, the average recession post World War II, 9 to 18 months, I think. Do you think this time it's going to be a longer recession or a deeper recession? What are your thoughts?
I think real estate market definitely is going to take 12 to 24 months to kind of slow down, we'll call it, or decline in prices in certain areas. I think maybe more the public markets or the liquid markets, kind of like crypto stocks, is maybe a year or so of, we'll call it the crab market, right? Where it kind of maybe goes up and down and kind of sideways for a while as it finds out what direction it wants to go. I think a lot of the froth in some of the markets have been taken out over, back since the spring this year. And ultimately, we'll probably recover before real estate does.
Okay, so let's look at cryptos. Bellwether cryptocurrency obviously is Bitcoin, trading right around 21.3 and change today on August 22nd. How much more bleeding is there going to be? That's a 2/3 decline in the value of Bitcoin. I'm not surprised by it. The question is, how do you know when to get back in?
You never know in life. Unfortunately, the very top and the very bottom. My approach here is, I think for a while we're going to range in this, let's just call it 15 to 30, 35 range. We may have seen the bottom, or maybe in the next few months, 6 months, maybe we see a little bit lower low. But my personal opinion is I don't think we're going to see what people are starting to call out now at the 6 to 10K level. I think that's kind of a little bit crazy. I think we're kind of have seen the bottom, or soon will see that bottom. And I think, my game plan here is, as you see these sell-offs and people start calling for those ridiculous low prices, I think it's a great time to, do your dollar cost average into the market.
All right. One thing that's nice about digital assets is there is no fundamental market. You're selling Tesla stock, you're buying Tesla stock. There's an underlying company there that's got to put out EVs. And if it does badly, your stock's going to do badly. But with digital assets, we don't have that issue. They really trade strictly on emotion, don't they?
I think there's definitely a couple of aspects to that answer. And one is, there's definitely momentum shifts in the market, let's call it on emotion, on which direction the market is going as a whole. And it kind of looks at like the NASDAQ and the other markets to see what type of environment we're in. And if we're more of a risk on or risk off type environment, on the other side, there is also network effects and applications and people actually using these. I mean, I think we're definitely still early to the game, and that can't quite be measured from, an investment standpoint, but we are seeing that adoption. So, that's how I would approach that.
Okay. It's interesting there. I think there's some validity to it, but,
What's your thoughts?
They still are relatively new markets for digital assets. And it's still kind of the Wild West in a lot of places. The regulators look like they're going to want to get into the picture, but they've held off so far, which I find kind of interesting. Is regulation in this market welcome or unwelcome, or both?
Don't just survive, thrive. The Financial Survival Network.
Torq Resources is an exploration company establishing a portfolio of premier copper-gold early-stage projects in Chile. Torq's management and technical teams have a strong track record of raising capital, discovery, and monetization of exploration successes. The company's Margarita copper-gold project is located within the prolific coastal Cordillera Belt in Chile, which hosts some of the world's largest and most profitable copper mines. The Margarita project possesses excellent discovery potential for a major copper discovery due to the strength of the alteration system, large-scale magnetic targets, and the presence of copper oxide mineralization. Drilling is anticipated to begin in Q3 of this year. Torq trades in Canada under TORQ and on the OTC under TRBMF. To learn more, go to torqresources.com. That's torqresources.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
I think it's like everything in life, right? Or when it comes to the laws, I think there's some laws that could definitely be put in place that would make a better environment for everybody and would allow institutions and certain bodies that have to participate into the game, because they can't participate without certain rules put in place because they have certain accounting guidelines, certain legal framework. So I do welcome regulation, and sometimes just where regulation goes, sometimes they maybe over-regulate, right? And that's always one's perception, and everyone has a different opinion what that looks like. But too many rules can also slow things down and slow the development of the crypto, especially here in the US, where some people are thinking that more of the investment may end up going offshore.
That's very possible, although it can go offshore and come onshore. That's why really regulation in a lot of respects for this is futile and isn't going to work, because after your initial offering, whatever it might be, if it wasn't for sale in the U.S., it's easily for sale in the U.S. So you're going to not allow the exchanges to sell unregistered coins, or are you going to, I'm not sure like what the point of the regulation is, because there'll be a country out there that will let anybody register anything or start trading it. And then if you have your own digital wallet, they can't really stop you from buying a so-called unregistered coin anyway. So this is really challenging, and then you can't stop them once they're out. If they go bust, well, that's kind of the end of the discussion. Then they're gone, and then we don't worry about it. But the challenges of regulating digital assets are, crazy.
Well, I think some of what we've seen recently with Tornado Cash is that, yes, you can go and interact with your wallets and purchase tokens, outside the U.S. jurisdiction. But if you ever need that fiat off-ramp, that's where the U.S. government here is kind of stepping in and can force that, these exchanges to comply, that if any tokens are received from these certain wallets because of these transactions, they're not allowed to participate on that exchange or use that exchange, or they could freeze those assets on that account. That's the problem we may face.
That's an interesting way of doing it. But even then, you could be on a foreign exchange and nobody knows the difference, right? I mean, the extraterritoriality of the regulatory folks, it's either they're all in it or none of them are in it. And as a recovering attorney, is the kind of things I look at, the limits of what the government can do to purportedly protect you from yourself or from people out to take your money. So since we last talked, you're in the process of setting up a fund. Can you just share with us what that's about and how we can go about what types of returns we can get and how you go about investing?
Yeah, so over the last decade, actually over the last 20 years, I've been a heavy real estate investor and also distressed mortgages. And so over the last 10 years, we had a couple opportunities with, in offering and partnerships where we paid out a preferred return and bought pools of REOs and loans and resold them and returned capital. And we thought that it would be a great opportunity now with what we're seeing over the next 12 to 24 months in the market to, ramp that back up. And so we put an offering together that's basically going to be a holding company. So it'll kind of balance the risk where we're going to have real estate as a portion of the assets, equity in companies, and digital assets. And, based on how we model things out, liquidation of assets enable the payments of the interest to be paid to investors. And so we're going to be offering a 1-year term at 8% and a 3-year term at 10%. And you have the ability to auto compound. The auto compound is probably really good for those that have a IRA account because that's obviously a tax benefit there. And so that'll probably be rolling out here in the next few weeks as we kind of solidify our underwriting and so forth.
Okay. And what kind of returns do you think we're looking at?
So, yeah, like I mentioned, we're going to be doing if someone commits to a 1-year term, it'll be an 8% interest only. And if someone commits to a 36-month term, it'll be a 10% interest only. But if they choose to auto compound, it'll be a 10.47% APY.
So you can keep rolling it over. Do I have that right?
Correct. Yes. So that's where it's probably best suited, especially those that have an IRA account that don't want to take payments.
Okay.
We found that in the past that typically when you take get a small interest payment, you can't reinvest it back into certain offerings because of minimum subscription amounts.
Right. Gotcha. So that's kind of like the dividend reinvestment program, or I guess you call it a distribution reinvestment program, a DRIP.
Correct. That sounds right.
Interesting.
It's compound interest is really what we're looking at, right?
Mm-hmm.
So,
all right. So tell us the assets involved, and you're putting assets into it yourself. You're investing.
Correct. Yeah, we're going to be contributing initially, cash, at least $1 million to contribute, plus approximately 12 properties that are going to be ready to be built on very shortly. We're in the process of doing the plans right now. And we're also going to be contributing equity that we own in companies, maybe like Coinbase. We'll be contributing that. And, then we're also making our business plan for the next 12 to 24 months to increase assets, like I mentioned, in the real estate sector, the digital assets, and equity in technology blockchain companies.
Okay. So, all right. Interesting here. What kind of disclosures you making on it? What type of reporting is there going to be?
So all the disclosures are in the note. It outlines all the risk disclosures, on all these different assets that I did mention that have to be signed off. Currently, there'll be monthly interest payments, 1099 interest statement within the first 30 days at the end of the year.
Mm-hmm.
And as of right now, to get started, that's what's on the table.
Is there any potential here for capital appreciation, or is this just a straight cash?
We're doing a straight yield fund.
Okay. All right. Well, that's really interesting. I assume you guys out there are going to want to know more. So, Joe, where do you go to find out more about what you're doing here?
It's best for those to go to robertventures.com, fill out that form. You can book a call and speak with me directly.
Excellent. All right. And there's a link, of course, in the show notes to this interview on financialsurvivalnetwork.com. Make sure you sign up for your free newsletter while you're there. And hey, what are you doing for yield here? Are you chasing cash flow? Are you chasing security? Are you chasing both? I'd like to know. Send me an email, kl@kerrylutz.com. If you have a question for Joe, include that as well, and we will get you an answer. Joe, it's great to have you back on the show. We'll talk to you again real soon.
Thank you very much.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.